Hi everyone, welcome to the Mighty Trades channel. My name is Johar and welcome to another episode of Weekend Price Analysis. So last week we concluded our episode with IDBI Bank. So let's not waste any more time and move on straight over to CADILAHC Healthcare. Okay, so if we look at this chart here, we are looking at the weekly time frame right now and we're looking at a 5-year view. So there's a clear downtrend in this chart. It made this very huge bearish engulfing candle. This is where I would have gotten alert about my position if I had any over here. Then it broke this support over here. It broke this support line over here. So it's in a clear downtrend. It's very close to this support zone now. This was the previous resistance, which should ideally act as a support. It's corrected quite a bit from its top. This is almost a 45% correction. Wow. So yeah, there is no potential for any new trade as of now. So nothing to look at over here. Moving forward to JSW Energy. Okay, this stock has outperformed the market since the last 2 weeks, right? Because the market's been falling or consolidating since the last couple of days, but this stock is clearly in its own path right now. Let me switch over to the daily view to see a more shorter term trend. So yeah, look at this. I mean, the market was in a very bad position but since the last couple of weeks, but this stock has just been on an uptrend since the month of February. So this is going to be a momentum play. The technical setup is very strong, so it's very hard to ignore this chart right now. So even if we hold it up, even if we hold up the target till the all-time high, then we get close to a 20% return over here. And let me put the moving averages a bit on screen. So it's trading above all of its major moving averages and it's been in a strong uptrend since the better part of the last 2 years, right? So clearly there's something going on in the stock. Let me quickly open up the fundamentals of the stock as well. So yeah, it's opened up already on my screen. And if you see here, the sales are good. The quarterly sales are stable. I wouldn't say they're going up, but they're stable. The profit margins are also stable. The net profit is also very stable. So that's a good sign. If you look at the yearly sales numbers, then those have come down a little bit over the last 2 years. But the profit margins are very good. But one good thing that we can see is that the amount of interest it used to pay has gone down significantly over the last 2 years. So let's just look at the borrowings. So yeah, the borrowings have come down. As you can see here, the borrowings are very high, but they have been consistently coming down. So that is a very good sign for the company. And if you look at the shareholding pattern, then the promoter holding is stable, the FII holding is stable, the DIIs are increasing their positions, the public holding is going down. So this is also a very good, stable shareholding pattern as well. Let me look at if someone's then public as well. Okay, so Autumn Investment and Infrastructure Limited has been consistently increasing their position in the stock. So that is also a good sign. So overall, the stock is in a good momentum. The fundamentals are good. The shareholding pattern is great. And I think very soon this 50-day moving average is going to cross over this 100-day moving average. If you look at even a more shorter time frame, you should be able to spot this already. So if I look at the 2 hourly time frame, you can clearly see here that the 50-day moving averages has already crossed the 100-day moving average here. So this is a 2 hourly candle that it's crossing. This is not a daily candle. So just keep that in mind. So on a shorter time frame, this has already happened. So I think possibly in the next 1 or 2 weeks or 3 weeks, this can easily give you a 20% return. And since the market conditions are not really that great right now, we are going to keep a very tight stop loss. So I would ideally keep my stop loss at this level, which is close to 320 rupees zone. So if we were to add the stock in our positions tomorrow, So that's close to a 5% risk and a 20% gain, but in a very, very short time frame. So yeah, let's add this to our tracker. Today's date is 20th February. This is the date we identified the stock. This is the current price that we are looking at. Stock is in good upward momentum, outperforming the market. Okay. So our target entry price is going to be the same price as today. Our target is the all-time high, which is, let's see what this is, 407 rupees. So the potential gain is close to 20%. Our stop loss is going to be really tight here, so it's going to be what is this? 322. So let's keep it 325. The potential loss is close to 4.5%. I'm going to mark this trade as active. The current market price is this, and we are going to keep tomorrow's buy date. All right, great, one trade already. Okay, quickly moving on to HEROMOTOCO Corp. All right, let's look at the 5-year view. Let me remove the moving averages, and again looking at the weekly chart, stock was in a downtrend since September 2017. This is the low in COVID. It quickly ran up till here, and then it made this high on 22nd February. And since the last 1 year, it's only been falling, right? I mean, this was February 2021, and now we are in February 2022, and it's still in a downtrend. This, if we try and draw a trend line, this is the sort of downward trend line that was in, and this trend line was broken over here in the month of Jan, and since then it's been consolidating very close to this trend line. It has retested it a couple of times, but it's staying up. And if we look at the wicks, it's making higher highs, right? The highs are still going up. Let me just put my phone on silent. Okay. So the highs are trying to go up, and let's look at it from a shorter time frame to see if the lows are also up. Okay, so yeah, as you can see, it's been retesting this trend line pretty significantly here, but since the last couple of days, it's been trying to stay on top of this resistance zone which it's facing. Okay, this potentially could be a head and shoulder pattern. I'm not really sure about it, but this could potentially be a head and shoulder pattern. Let's see this. If we consider this to be the left shoulder, this would be the head, like this, and this is currently the right shoulder which is being forming. So this is an inverted head and shoulder pattern which I can see here. This will be the neckline, and on the basis of this is the target that we can get. Okay, so the target is 16%, which is, let me set this price point here. Okay, so this is the target that we can go for. So the target is very small. Let me see, if we were to keep a stop loss, the stop loss would be below this trend line, because then we know that's gone back into its downward momentum. So from the current market price, this is close to a 6 to 7% risk that you would have to take over here. And this trade would only get activated if it breaks out of this neckline. So let me move the neckline a little bit higher, because if we enter into this trade, we want to be very sure about this, right? So accordingly, then our target would also go up marginally, not by much. Let me recalculate the depth from here. Okay, now our target is close to 17%, so not a lot of difference, but the risk to reward is not really uh, it's not really that good. mm, but technically it's showing strength. Let me quickly put RSI also into the picture and see what's happening, right? I've been sort of trying to add a couple of indicators in my strategy to sort of further refine my strategy. So let's quickly have a look at RSI here. So if you look at RSI, the RSI is in a good place because it's staying above 50 all the time, right? If people don't know that RSI above 50 means it's in a good upward momentum, and if RSI is below 50, that means it's in a sort of a downward momentum right now. But above 50, that means the upward momentum is stronger compared to below 50. So if we look at the RSI is staying above 50 all the time. You see this red candle, the RSI closed above 50. Over here also on this red candle, the RSI went slightly below 50, just at 49, 48 levels, not a big deal. But then it quickly went back up again, and now it's again staying close to 60 levels right now. So even RSI is showing strength in the stock. Okay. So to be really, really sure about this trade, I would wait for the price to cross this high and sustain above it, right? This right here, 2847. It needs to cross this high and at least sustain above it for at least one whole day. Currently the price is not being able to sustain above it, and that could be because the market situation right now is pretty you could say grim right now. The bulls aren't really confident, I would say, and neither are the bears very confident about what's going to happen, because one good news can come and take the market up and one bad news can come and take the market down. So I don't think a lot of players are right now, inside the market doing anything. So I would wait for the stock to cross 2845 and then only I would initiate this trade. And because this head and shoulder pattern is pretty small, this target should be achieved very quickly relatively, because if we look at the upward momentum that the stock goes into, when it goes into an upward swing, it goes up very fast and also goes down very quickly as well. However, if we take the trade above this line, then if we were to come up with an appropriate stop loss, I would keep my stop loss extremely tight in this case. I would not want to risk anything more than 5% because the target is also very small. So 2699 looks like a decent stop loss. Let me see if the moving average can give us a better stop loss as well. So it's currently trying to go above its 200-day moving average. So that is a good sign, right? It's gone above its 200-day moving average. So what I'll do instead is I'll keep the 200-day moving average as the stop loss. So that's a 3% stop loss. And the potential gain above this zone will be close to 15%. So even if it takes maybe 1 month at the max to achieve this target, then this is a decent risk to reward ratio in my opinion. So I'm going to add this in my tracker as well. Hero Moto Corp. Oh, sorry, it's HEROMOTOCO. Yeah, it's HEROMOTOCO. Okay. The price, the date is 20th Feb. The price is 2774.05. Okay. Inverted head and shoulder pattern. So we are spotted. The target entry price that we have set for ourselves is 2847. 2847. The target is 3270. So that's a reward of close to 15%. Our stop loss is the 200-day moving average. If it gives a daily close below the 200-day DMA, we will exit the position. So it's 2754. 2754. Okay, there we are. And we are currently waiting for entry. This is the current market price, which is 2775. All right, great. So that's the analysis here on HEROMOTOCO Corp. Let's move on to Jubilant FoodWorks. Okay, let me hide the RSI again. Let's look at the 5-year view. So we're looking at the weekly chart. So stock is in downtrend. It's corrected quite a bit. I wouldn't say it's in downtrend. It's corrected right now, and it's trading now near the support level. So hopefully if the support level continues holding up, then we can see a bounce from here. But as of now, there is no upward momentum in this chart. So nothing to further look here. Let's look at ABB. Okay, so ABB, if we look at the weekly chart, was in a good uptrend since last year. Now, one concerning thing that I'm seeing on this chart is this gap that we are seeing here. This breakaway gap is a little bit of a concern. Let me switch over to the daily chart here. Okay, so we see it broke, it made this large gap down opening on this particular day, and since then it's not been able to move up. So to see any further upside momentum in this chart, it needs to first fill in this gap, and it needs to sustain above the previous swing high, which would be this zone. So until unless it sustains above this price, I would like to avoid the stock, because this breakaway gap is not a good sign. It usually is a sign of a new trend, and since it's on a downside, so it usually is a sign of a downtrend at this point. So we are going to avoid ABB until and unless it sustains above this price. Okay, moving on to PI Industries. So PI Industries has been a good uptrend, not just since 2020, but since September 2018, right? It's been a strong uptrend, and then the COVID fall came, and then again it resumed its uptrend. And the uptrend went on until November 2020, and then it consolidated here in this range. It probably made some chart pattern here, maybe a inverse head and shoulder on this side, and then again resumed the uptrend, and now it's in a downtrend. Not a downtrend, but it's in a correction phase right now. It's corrected by approximately 30%, and right now the price is 27% away from its all-time high. So as of now, there is no bullish momentum in the stock. It's consolidating here, which is this support zone, which was a previous consolidation area. So it is consolidating here. Let me look at the daily candle. So yeah, there is no currently there's no bullish momentum in the stock. That bullish momentum will only be seen if it breaks this high and sustains above it. Then we can maybe see some new chart pattern that can develop here. But as of now, there is no trading opportunity here. Okay, let's look at Astral. Wow, so Astral is also is going through a very deep correction. Every week it's going down massively. I mean, just look at these candle sizes. It's going down by like 10-12% every week. That's not a good sign. It will potentially take support around this zone. So right now there is no trading opportunity for us, but this zone should act like a good support. So just mark this over here. Let me draw a rectangle. Yeah. So this is the ideal spot where the stock should take support. Okay, moving on to our next chart with StarHealth. Okay, so this is, I think, the new company that Rakesh Jhunjhunwala launched. So yeah, all the new IPOs are not having a good time right now, so they're going down, and the chart is also very limited for us to make any judgment on this. But the stock is in a downtrend, so nothing to see here further. Page Industries. So if you look at the 5-year view, this was a high made back in August 2018. Then the stock took a large correction here, tried to move up again, but then the COVID fall came here. This is Jan 2020, and then the COVID basically brought the share price back down, and since then it's been in a nice uptrend. And currently it's again in a correction phase, but last week was a good week for the stock. It went up by 4% while the market didn't really do much. So clearly there is a momentum here, but I think Page Industries is more of a investment story rather than a trading story, because it's not a very highly volatile stock. Plus, one stock costs like 41,000 rupees. I mean, I don't have so much capital to even buy one share of this stock. I mean, I can buy one share, but not more than two shares, I think, as per my trading rules. So, for an investor, I think if you can get this stock somewhere close to this price of 35,000 rupees, I think it's a very good price to invest. And if you look at the 200-day moving average, so yeah, that's also close to 35,000. So if it closes below, if it comes close to its 200-day moving average, I think it's a good time for long-term investors to accumulate the stock. But I don't see any large trading opportunity here. Moving on to Bal Krishna Industries, this is also correcting. There is no real bullish momentum in the stock. It's been correcting since September, and it can potentially fall up to this zone right here. So yeah, no trading opportunity here. Sale has been in a correction phase since May 21, and it's currently at a very, very strong support. I mean, this zone should act as a very strong support from here, because it has consolidated under this zone for a better part of 10 years, right? This price has been a resistance since December 2011. So it's multiple times it tried to cross the zone, but every time it fell back, and finally it broke out from here, and now it is retesting its support zone. So let's look at the monthly chart, because since this is such a historic breakout that has happened in this stock. And even if you look at the volume buildup, just look at the accumulation that has happened in this. This is a massive accumulation that's happened uh, at this, at these 3-4 candles over here in these 3-4 months. Let's quickly have a look at the shareholding pattern to understand how the shareholding has changed. Okay, so if you look here, the FIIs have added some quantities here, but they have reduced their quantities in the month of December. The DIIs holding has also reduced in December. The public holding has gone up by 3%. And if you see here, Rakesh Jhunjhunwala has also seemed to have exited some of his positions in the December quarter. Let's look at the FIIs. There's no big names in DIIs. LIC has completely gone out, but then there's LICI Market Plus. I don't know what that is, but they have also reduced their position. These guys have completely exited the scene. SBI and Nippon Life India. So like I can't really say who has accumulated the stock at this price, but some big players have entered into the stock for sure, and it's currently retesting this breakout zone. Now, to see any bullish upside, this stock needs to break away from this trend line that it's created. If it closes above this trend line, then there's a good chance that you can see a rally, let's say from here till the all-time high, which is a 40% gain. But for that, it needs to first break away from this trend line, and only then we can take a call. So as of now, we should add this in our watch list. but there's no trading opportunity right now. Okay, moving on to Vodafone Idea. All right, I avoid penny stocks. Plus, if you look at the Idea's shareholding pattern, you'll notice that almost everyone in India has, bought the stock. I mean, just um, look at the shareholding pattern. 22% of the stock is held by the public. Promoters are holding 72%. Am I looking at the right thing? This seems to be the right stock. Okay, maybe I'm mistaken. Shareholding pattern looks okay. I mean, the public holding has gone up recently, uh, but I would still consider this to be a penny stock. It's a very news-based stock. Some news comes about some AGR dues or anything, and the share price shoots up and goes down also so quickly. So it's very volatile, and again, it's an upper circuit, lower circuit sort of play. So I would like to avoid the stock. I don't think there is much to do here. However, this is a good, you could say, a multi-bagger bet that you could take. This not from a trading perspective. I mean, I think it's not a bad idea to maybe buy like 20-25K rupees worth of stock and just buy it and forget it. Just money that you're ready to lose. Because if that does happen, then the stock can become a multi-bagger if some player tries to take over Vodafone Idea or something like that. Because Vodafone Idea does have a lot of customers, and what it has more than customers is it has customer data, because they have been in this business for many years, right? Vodafone Idea. So they have collected a lot of information, they have a lot of data on people, which is a potential gold mine to any other telecom player or any other internet player out there. So looking at it from that lens, it can be a good contrarian or turnaround buy, but there's no trading opportunity per se. So moving on to Biocon. Okay. So we are looking at the weekly chart, and if you look at the last 5 years movement, so this was a resistance zone back in 2018, 2019. This is a whole consolidation that did for more than a year. Then it went down here in 2019, tried to go back up again. Then this is the COVID fall, quickly moved up from this zone, and right now it's back in this consolidation area. It's very slow moving. It goes down for weeks, goes up for weeks, again goes down for weeks, again goes up for weeks, again went down for 3-4 weeks here, and now it's just been consolidating in the zone. I don't see much point in taking a risk in this kind of stock. So let's move forward to Gujarat Gas. Alright, Gujarat Gas is in a good uptrend, and it's consolidating at its, I'm guessing this is the all-time high. Yes, it's consolidating at its all-time high level right here. So that's a good sign. Let's look at a shorter term view here. So, okay, this is a good consolidation. It's making higher lows. So that is a very good sign. And it is also making higher highs. So this looks like a channel that it's trading in right now. So if the price were to come to the bottom of this channel, let's say it came to the bottom somewhere around in March, and if you were to take a target to the top of the channel, then that's a 17% gain. So it will be a nice short trade over here. So that's the analysis on Gujarat Gas. There is no large trade opportunity I see until unless it breaks out of this channel. Still, the target till the all-time high is just 23%. So it's not worth my time. Has been consolidating for quite a bit. Plus, I'm not really sure if this is a PSU an entity or if this is a private entity. I just need to check that first. I usually try and avoid PSU stocks. Governor of Gujarat. Yeah, so this is a PSU entity. Yeah, plus FIIs have been reducing their position here. The DIIs have sort of maintained the position. The public holding has been pretty much the same. It is in a good momentum, that's for sure. Um, Plus, gas prices are going up across the globe. Commodity inflation is happening. So I'm not really sure. This it doesn't really interest me, this chart. If someone else wants to do their analysis or someone agrees with this short-term trade, then I think they should take it. But I'm really not interested at this point. So moving on to Sonarcons. Okay, Sonarcons is also again a new IPO that was launched. After listing, it went up very quickly, and now it's in a correction phase. It's made this bullish candle over here, but again it was not able to break this green, the last all-time high. So right now it's an avoid. I don't see any reason to take a trade right now. Alchem Labs is in a correction phase, needs to break away from this trend line for us to see any new bullish momentum on the stock. So nothing more to see here. Lupin. Okay, so this stock is underperforming the market hugely, right? I mean, it's come back to its price where it was trading back in 2018. Let me look at the fundamentals a little bit here to see if there is any contrarian trade in this case. Okay, so if we look at the sales have pretty much remained the same quarter on quarter. Net profit has also been pretty much the same. If you look at the yearly figures, then there has been again no real improvement since March 2018. The sales was 15,800. Now the trailing 12 months is 16,300. Just an increase of 500 600 crores in 5 years. So not that great of a growth story. Net profit has significantly gone down over the last couple of years for some reason. I'm not sure why that is the case. If you look at the shareholding pattern as well, promoter holding is stable. The FIIs are slowly exiting the share. The DIIs are increasing their positions here. The last 2 quarters, that's been the same. If you look at the public, Rakesh Jhunjhunwala has completely exited the stock, possibly, or his holding has gone down below 1%. And the stock has been largely underperforming the market. So, no further reason to study the stock. Should move on to Oro Pharma. This stock has also been in a downtrend and underperforming the market. It's not really moved anywhere since the last 5 years. This high was made in December 2015, and since then it's not done really anything. So almost a 5-6 year consolidation, and nothing's happened. So nothing further to look here. Max Health is in a good uptrend. So if we are looking at the weekly chart here, okay, it's been making higher highs and higher lows consistently, right? If we see here, if we draw this trend line over here, this was the trend line that was following largely this trend line. Okay, then made this high and it topped out over here, came down and made this low, and this low is also around this resistance, this previous resistance zone. If you look at this red candle, this zone was the resistance. So it has sort of retested this resistance zone, moved up again corrected, and it's created a higher low. So until and unless this previous low is broken, so once, first of all, if this low is broken, then it's not a great thing. But if this low is also broken, then it's a really bad thing. So because that would signal that the share price has now moved into a different trend. It's moved from an uptrend to a larger downtrend possibly. So as of now, I don't see any real trading opportunity here. This could be a good investment zone if you believe in the growth of the healthcare sector. But right now, I don't see many trading opportunities. It's also gone down under this trend line. So that's also a little bit of a negative. It's not a large negative, but a little negative. But as long as it stays above these two lows over here, these two lines, the stock can possibly start moving up further. So you could possibly take some positions here, but I don't know how much further it can move up. So it will be a very large momentum play. But right now, I think I would like to avoid the stock. Moving on to Chola Mandalam investment. This is in a good uptrend, even though the market and all the other major indexes have fallen from their all-time highs. The stock is at its all-time high. So definitely in a good uptrend, the stock. Let's look at the daily chart to see. Just look at the outperformance. I mean, the markets have not done anything, but this stock is trying to break out from this zone. Again, this will be a momentum play right now, but the market is in such a condition that taking momentum trades is very risky at this point, especially when there is no clear target on inside, right? Because this stock is at its all-time high. If I look at the monthly chart, the stock is at its all-time high right now. So there's no real way for us to calculate targets. We can use Fibonacci extensions, but I don't really understand Fibonacci that well, so I don't use it. But since this would largely be a momentum play, I would avoid the stock. Policy Bazaar, again a new IPO that was listed recently. Nothing to look at here. It's in a clear downtrend. Avoid. Bank of Baroda. Okay, this chart setup looks very interesting. If you look at the 5-year view here, all right. So I'm seeing something of a cup with handle in the stock. Let me draw this like so. So this is the cup. This is the handle. This is the neckline. And it recently broke out of this neckline. And it looks like it has retested this neckline. Now, if you were to calculate a target on the basis of this chart pattern, the technical target for the stock comes to about 170 rupees. So let's mark this, which from the current market price is 63%. So this is a very, very nice chart setup. Let's switch over to the daily view to try and understand what price action is happening. So this is the breakout candle right here. It went up very strongly, and then with all the negativity in the market, it's come down and retesting this zone right now. So this is available at a very good price, but the market is in such a bad mood right now. It can very easily fall down from here. So for me to be really confident to enter into this trade, I would wait for the stock to first fill this gap that is created on the daily chart and sustain above this price. So this is 118 rupees. And from this price point, the target comes to, a potential gain comes to a good 45-46%. And my stop loss in this scenario would become, I think we'll need to keep it a little wide here with this. Let's put in the moving average to see if we can get a better idea for our stop loss. So the price is above all its moving averages. That is very good. Yeah, I will keep this as a stop loss, the neckline. If it breaks the neckline, then we would have to exit the stock. This is the logical stop loss that we need to keep. Anything above this, and we might exit our position too early and book a minor loss, but the stock price might just shoot up from here. So to be sure, this looks like a good stop loss zone. So let's add this to our tracker. The current price is 105.35. This is a cup with handle pattern. Okay. If you look at the target entry price, let's also quickly, before we add everything to our tracker, let's also quickly look at the fundamentals. Okay, so the stock price is trading below its book value, which is very good. That means it's undervalued. If we look at the quarterly results, those are also looking up. They're looking good. If we look at the profits, it was very inconsistent in its profitability before, but since the last 3 quarters has been making good profit, and it's made the highest ever net profit over here. So that is a very good sign. If you look at the yearly numbers as well, again, highest ever net profit. Except for 2012, this year could be the highest net profit that the bank generates. That's extremely good here. And since this is a bank, if you look at the borrowings, that means the deposits that they have taken from the general public, those have also gone up in 2020 and 2021. That has also remained stable. That is a very good sign as well. That means that borrowing capacity has increased. If we look at the FI holding, that is very stable. If you look at the DI holding, that is also stable. The public holding is also pretty much stable over here. And the promoters is President of India. Okay, so this is a PSU stock. Okay, that is interesting. So it is a PSU stock, and as I've said multiple times, I largely avoid PSU stocks, but the chart pattern is very convincing right now. And if we look at the major indexes, the PSU banks are doing really well compared to the private banks and Nifty as well. So that also gives me a little bit of confidence that this stock might likely outperform the market. I'll just quickly show you the Nifty PSU chart as well. So if you look at the Nifty PSU Bank Index, you can clearly see how nicely it's been in a strong upward momentum. And there's a lot of room for the PSU Bank, right? If we look at the monthly chart here, the PSU banks have corrected very sharply, and only now they have been able to move up. So there's a very good room for up move in the PSU sector as well. And with the government wanting to divest so much of their assets, like they're coming out with the LIC IPO, there's a very good chance that these banks might also get sold off to some private player. So that can also push up the prices of these stocks, which is largely why I believe the prices of these stocks are going up. Where did Bank of Baroda go? Yeah, there it is, Bank of Baroda. So I think this is a good bet. We have a nice target on our hands. The the risk to reward ratio is also good. So definitely it makes sense to enter into this trade if it crosses our target entry price. So the target entry price that we have kept is this 118 rupees. Target comes to 172. So that's a potential get of 45%. Our stop loss is coming to this zone, which is 105. Potential loss of 11%. Currently, we are waiting for entry. This is the current market price. Okay, so that's the analysis of Bank of Baroda. Now moving on to UBL. Okay, UBL, United Breweries. So stock has been in an uptrend, is also in an uptrend. I would say it's not been in an uptrend, it is in an uptrend right now. Let me look at the shorter daily time frame. Okay, so it's taking support as 200-day moving average right now. It's trying to stay above that. The price has gone below the 150-day moving average, which is a little bit of a negative sign right now. So for us to take any bullish position on the stock, it needs to close above this previous swing high, and then we can maybe think about entering into this trade. But as of now, there is no trading opportunity here. Let's move on to Tata Communications. Okay, stock is in an uptrend. It sort of seems like it is topping out in this zone for some reason to me. Um, yeah, it's not looking good right now. Um, I can't. It's a confusing chart. It's literally all over the place. So I can't understand if there's any trading opportunity right now or no. So I'm gonna skip it. Let me just check what the time is. Okay, so we have a couple of minutes more left. ACC. So largely, I've noticed that the cement stocks are not doing great. Let me see if ACC's results have come out. ACC Limited. So yeah, their December results have come out. Their sales are good. Their margin has also gone down pretty significantly compared to what it was, in 2021. So their margins are, I think, coming back to their mean margins, which is close to 13, 14, 15% sort of ranges. Mhm. The profit before taxes really come down. So the net profit is not great right now. The sales are going up, the margins have gone down, so probably inflation is playing a very large role in this case. If you look at the yearly time frame, then the results are really good. So fundamentally, the company is growing, it's strong. If you look at the shareholding pattern, the FII holding is stable over the last uh, couple of quarters, over the last 3 quarters. The DI holding is also very stable over the last 3 quarters. The public holding is also stable over the last 3 quarters. So fundamentally, there's nothing wrong in this chart. I think it's gone into a very broad consolidation phase right now. So if we were to draw this box around here this way, so this is a zone in which it's been consolidating, right? This box, and this box, we don't know for how long it will consolidate here, but ideally if it breaks out from this box, the the minimum move that you can expect the is the height of the box. So if it breaks out, then this trade will get activated, and it should minimum 90% of the time go up till the height of the box. So 3043 rupees is the target that you get. But unless it breaks out of this box, there's nothing we can really do about it, because it can consolidate here for weeks, months, years, we don't know. So we'll only look at the stock if it crosses this high of 2566 rupees. Moving on to Hind Petrol. Nothing really happening here. It's been consolidating since 2018 in this price zone. I wouldn't say it's really bullish right now. It's in fact in a little bit of a downtrend, because if you see the highs are lower and lower. The low has surprisingly been the same. It could potentially be a double bottom right now. See, this bottom and this bottom are pretty much at the same level. So it could potentially be a double bottom, and the price might go and test this level again of 354. So that would complete the W pattern of the double bottom. So if that is going to happen, then that's a gain of close to 18%. But otherwise, I don't see any large bullish momentum or trend in the stock right now. Moving on to Punjab National Bank. Again, nothing really happening very strongly. If we connect it this way, it seems to be trading in an upward channel for sure. Because if you look at the lows are moving up consistently. Right? The lows are nicely moving up, but the highs are not really moving that high. So I think this is making maybe a ascending triangle in a very, very long time frame. And this could easily, I think, take another year of consolidation in this zone to break out of this ascending triangle and then make a big move. And when it does that, and if it does that, then the target that we can expect is a, a, an easy 30-40% move, from the top of this triangle. So until unless it moves out of this zone above this high, there's no real trading opportunity right now. It's just going to keep consolidating. And if this low is broken, this previous low that it made here, which is around the 36 rupees range, then it'll go back into a downtrend, and there's no trading opportunity at all then. Okay, let's look at Bandhan Bank. Bandhan Bank, again, very similar to PNB, has been consolidating in this range. In fact, it's in a little bit of a downtrend because the highs are getting lower and the lows are also getting lower right now. It's shown a little bit of a bullishness over the last couple of weeks, and in the last 3 weeks also, it's been consolidating in a very tight price range right now. So it's in a consolidation zone. There's not really any bullishness that I can see. Currently, I mean, it's not even broken its pre-COVID high, right? The pre-COVID fall, the price was about here. This is the price on Jan 2020, right? This 400, 500 rupees is not even gone there. I mean, the entire market has broken its all-time high and gone up another 30-40%, but this stock is still at the very bottom. So there's no large bullish momentum happening in the stock. So it's better to avoid this. Okay, if you look at Hindustan Aeronautics, it is consolidating at its all-time high right now. No real bullish move happening. It's in a very long consolidation phase since the last 6-7 months. So until unless it breaks out of this 1483 rupees zone, there's not really much to do here. TTML is an upper circuit, lower circuit stock. I think there are some people who might have made some good money in this. I personally did not make any money because I never could catch this trade. And after a point, it just went up so high that I did not have any guts to buy it at this price when it did give an entry point here, because even after this price, it did give you a nice 70-80% return. But now the correction has come, it's sharp, it's deep, and it still seems to be correcting. And very possibly, if I'm not wrong, it looks like it has made a proper head and shoulder pattern. This is not a inverted head and shoulder pattern. This is a proper head and shoulder pattern here. So let me draw this for you guys. So this is the, sorry. So this is the left shoulder here. This is the right shoulder here. Sorry, this is the head here. Bring it down a little bit. Yep. And this is the right shoulder that is created. Okay. So as you can see, this is a clear bearish head and shoulder pattern that is created. And if this correction arc is to still continue, then the technical target comes to here. So the price can go up to 1 rupee also, as per this analysis. Yeah, so it can be a pretty deep correction in this case. I don't really know how it's getting 102 rupees. Just sorry guys, give me a minute. Let me see if my calculation is correct. Hmm. Okay, I don't know why this is behaving this way, but ideally the price can correct really massively from here on. It can go down 80-90% as per this calculation that it's doing. Um, so yeah, this is what I have observed here. This proper bearish head and shoulder pattern. So if anyone has this, I would suggest please get out as soon as possible. This is not a buying or selling advice, by the way. This is just my opinion. Please do your own due diligence before doing anything. Go open the chart, draw this head and shoulder pattern yourself, calculate the target, what it comes out to, and make your own call. So that's the view on TTML. Moving on to Voltas. So Voltas is in a good uptrend. So it was in a continuous uptrend since May 2020. Then it took a pause, consolidated here, broke out, moved up, and again it's consolidating here now. So this can again potentially move up further if it breaks this downward trend line that it's currently creating. But there's a good stock. It is definitely moving up. But until it breaks this high, there's not really any trading opportunity for us. Moving on to Colpal. So Colgate Palmolive is a good company, fundamentally very strong. There is no trading opportunity here. This is a good stock to invest in. It's currently 20. It's close to 20%, more than 20% down from its all-time high. So I think if there is any investor out there who wants to invest in a good company, Colpal is the company that you should go for. NMDC has been consolidating here since a very long time. But if you look at the volume, there is a large volume buildup in 2021, which is interesting. And it seems to be making a sort of a rounding bottom or maybe a saucer type of pattern and it's trying to move up. Last week was not really good. It fell down by 10%. So until unless it breaks this high right here of 160 rupees, there is no trading opportunity. But definitely there's something going on in the stock because there is a large volume buildup that is happening over here. So do keep it on your watch list. I think there's something happening in metal stocks. NMDC is into metal. I believe they are into mining. So do keep it on your watch list. So I think we have run out of time. It's more than an hour possibly. So thank you for watching this video till the very end, and do check out the link in the description to this Google Sheet where we have mentioned all of our trading opportunities. So not many trading opportunities this week. Market's not been in a good mood since the last couple of weeks now, and it's very difficult to find good trading opportunities. So it's best to be very sure before you take any trade in the market at this point. As you might have seen in my own analysis, I avoided many trades today, small trades, which possibly would have been very easy to take a few months ago. But now the market's in a very different phase right now, so we have to be very careful of the trades we are taking. So we only have identified three trades in this week. Out of that, JSW Energy is in a really good place. So it's a good stock that possibly can be added next week in our positions. And for Hero Motocorp and Bank of Baroda, we will have to wait for our target entry price to be hit. So thank you again for watching the video till the very end. Have a good night and hope you have a nice and profitable next week.